What if I told you that one company is building the infrastructure for an investment boom larger than the Apollo program and the interstate highway system combined, compressed into just a single year? Applied Digital just reported their fiscal first quarter results, and the numbers behind their AI data center build-out are absolutely staggering. Let's break down what's really happening here and why this could be one of the most significant infrastructure stories of the decade. Starting with top-line revenue, the original estimate for Q1 was $49.9 million. The company actually reported revenue of $64.2 million, crushing expectations by 28.5%. This quarterly revenue also marked a 5.8% increase compared to the $60.70 million reported in the same quarter last year. Moving to adjusted earnings per share, the original estimate for Q1 was a loss of 13 cents per share. The company actually reported a loss of just 3 cents per share, exceeding expectations by 10 cents per share. This result was flat compared to the same loss of 3 cents per share reported in the same quarter last year. Now let's dive into some additional performance metrics highlighted during the earnings call. Let me start with the headline that should have everyone's attention. Applied Digital expanded their contract with CoreWeave from $7 billion to $11 billion over 15 years. That's an extra $4 billion in contracted revenue after CoreWeave exercised their option to lease the full 400 megawatts at the Polaris Forge 1 campus in North Dakota. But here's what makes this even more interesting. CoreWeave has also engaged Applied Digital to perform the tenant fit-out for the first 100 megawatts, which generated about $26 million in revenue this quarter alone and is expected to ramp significantly next quarter. Now let's talk about scale, because Applied Digital is building at a pace that's frankly remarkable. They currently have 700 megawatts under construction right now. To put that in perspective, they've gone from operating small Bitcoin hosting facilities just a few years ago to executing one of the largest data center buildouts in the industry. And they're not stopping there. The company has 4 gigawatts in their active development pipeline, meaning sites they believe can move into construction within the next 6 to 12 months. The financial engineering behind this expansion is equally impressive. Applied Digital secured a $5 billion preferred equity facility with Macquarie Asset Management. This isn't just about funding one project. CEO Wes Cummins explained that this $5 billion of equity capital effectively unlocks $20 to $25 billion in total capital when you include project financing. That's the kind of structure that allows them to scale across multiple campuses simultaneously without constantly diluting public shareholders. Speaking of project financing, CFO Saidal Momen provided some crucial details about the terms they're targeting. For CoreWeave-backed leases, they expect to achieve around 70% loan-to-cost ratios with pricing between 400 to 450 basis points over SLFR. The structure is split into 2 parts, 50% as a mortgage at lower rates around 300 to 335 basis points, and the remaining 20% as a mezzanine facility. They expect to close this financing within the fiscal quarter. The CoreWeave lease alone is projected to generate approximately $500 million in annual net operating income. And with Polaris Forge 2 now under construction, that number is set to increase substantially. The company's stated goal is to reach a $1 billion NOI run rate within 5 years, and these long-term contracts provide exceptional visibility into that pathway. Now let's shift focus to some of the key insights and takeaways from the earnings call. One of the most impressive operational achievements is how Applied Digital has compressed their construction timeline from 24 months down to just 12 to 14 months. That speed matters enormously in this market. Cummins emphasized that the limiting factor in AI infrastructure deployment is no longer GPU availability, it's the lack of data centers capable of supporting those GPUs. The industry has come to call these AI factories, and there simply aren't enough of them. This brings us to the broader market context. Public hyperscalers are projected to invest over $350 billion in AI infrastructure in 2025 alone. Cummins compared this to the U.S. interstate highway system, which cost about $500 billion in inflation-adjusted dollars but took 30 years to complete, and the Apollo program, which cost roughly $150 billion over more than a decade. This is an extraordinary concentration of capital happening in a compressed time frame. Applied Digital just broke ground on Polaris Forge 2 near Harwood, North Dakota, initially constructing 300 megawatts with the potential to scale to 1 gigawatt. They're in advanced discussions with an investment-grade hyperscaler for this campus. Additionally, they've entered negotiations with 2 other hyperscalers for 2 completely new locations, demonstrating how their proven execution capability is opening doors across the industry. One fascinating development is the influx of third-party power opportunities. Cummins mentioned that in just the last 4 weeks, they've evaluated over 50 different sites from parties that have secured power and land but lack the design and construction expertise to meet hyperscaler requirements. Applied Digital expects to proceed with at least one of these third-party projects this year. The company's strategic positioning in North Dakota offers distinct advantages: abundant low-cost energy, a supportive regulatory environment, and more than 200 days of free natural cooling annually. Their proprietary design targets a power usage effectiveness of 1.18 with near-zero water consumption. As demand continues to accelerate and proven developers become increasingly valuable, Applied Digital appears positioned at the center of one of the largest infrastructure buildouts in modern history. That wraps up our recap of Applied Digital's first quarter fiscal 2026 earnings. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way from Earnings Central.